Good morning, everybody. Welcome back to another Market Open. It is October 24th, 2023, 8:48 a.m. And we've got a green market, baby. We've got a very, very green market. And we've got a green market for what it looks like one main reason, which is good old Bitcoin. So we've got a lot to discuss today. We have earnings season that is in full effect. Google and Microsoft will be after hours today. So they will determine truly if the market can continue this trajectory. The 10-year has gone down from 5% right now to around 4.8%. So we're seeing a decline in the 10-year, which is good for equities. And then on top of that, we've had earnings all morning that have been kind of good. 3M, pretty great earnings. Spotify, pretty good earnings. GM, pretty good earnings, even with the automotive strike. So we're seeing that kind of Q3 earnings, not necessarily rally yet, but momentum that we've been talking about for the past couple of weeks on the channel. My opinion has been Q3 earnings are going to be good. It's just this macro environment. Who knows if, stocks are going to be able to keep up with it. But it seems like stocks got pretty oversold yesterday. And now these earnings, and if Google, Microsoft, Amazon, Apple, and Meta can continue to just produce stellar results, it looks like equities are going to do well, at least over the next couple of weeks, barring some more macro problems that we're seeing. So right now, maybe Q3 earnings is a little bit of a distraction, but with the numbers we're seeing, and we're about to go through a lot of them, they're doing pretty good. And then on top of all that, you've got beautiful old Bitcoin continuing to inch higher and higher. And that is also what is keeping the momentum rally going. So let's get into what we've got for today. It's going to be a jam-packed show. Thank you all for being here. And let's get into it. ADJ, John Stevens, Stefan Weather, Cyber Shadow, SP Narwhal, Monty, I Get Paid to Wade, Mr. Seymour Duck, Imnop, Ryan, Steph, John, Broccoli Bob, Hakoon, Ty Gordon, Aaron Sharp, Mark LeBlanc, Philip Rizzo. Thank you all for being here. Jason, the Victory Meta. Good morning, everybody. Midwest, Art of War, Juan, Carlos, Roy, Dominic, Nolan. Thank you all for being here today. Samarth Gandhi, going to see Peter Thiel at Oxford University. Wow. That's going to be fun. I hope you enjoy that one. That one will probably be uploaded in a little bit. Yeah, really enjoy it. And if you get to ask a question, ask a question. That'd be so awesome. I would love to see him talk in person. Markets Investing, Bryant Robinson, Peter, Marvin, Vishan, Persian Prince, Exomnics, I think that's your name, DPDR Infos. All right, everybody. Thank you for being here. Let's get started. So I think it is only right that we start talking about the company. Is it a company? Is it an asset? Is it a store of value? What really is it? It's like a girl, right? Like, what are we? Are we a thing? It's like, well, this is definitely a thing. Bitcoin is up 11% in the past, 24 hours. Really big. I don't even know the exact time frame on it, but it was 29,000 like a couple days ago, and within a day, it is now 34,000. Let me share my screen here. Bitcoin is up and Bitcoin is moving. Now, there's a couple reasons for why we're seeing some of this momentum. And then I want to talk about what this means for the overall stock market. Now, look, Bitcoin at this level is, in general, it touched 35,401 yesterday for a little bit, now at 34,702. I do not have a significant allocation of Bitcoin in my portfolio. I think I've been pretty public about that. People know my portfolio. I did check my Bitcoin on Robinhood last night, and I'm up 79%. So like the 0.001 cent I have a Bitcoin that I bought at 19,000, it's up 79%. It's outperforming everything else I have in my portfolio. But nonetheless, Bitcoin is up. Why am I kind of happy that Bitcoin is up? There's two reasons. Number one, from a financial media perspective, it's always fun to cover Bitcoin when it goes up, cover stocks when they go up, because there's all this momentum around the company, right? And all this momentum around what's going on with Bitcoin. So I think all that stuff gets super interesting, and it just leads to, more theories and ways of understanding financial markets. It gets more conversations going. So that's, I think, a fun thing to think about. But then on top of that, Bitcoin going up is really good for a lot of companies. As we see in the pre-market right now, Riot is up 14%. This is a Bitcoin miner, okay? Marathon is up 15.6%. This is another Bitcoin miner. Coinbase, I think it's up 5%. Coinbase is up 8.2%. Okay. MicroStrategy is up 8.8%. So if you have some proxy plays on these companies, you will also be able to participate in the rally, even if you don't own the asset of Bitcoin. What is my proxy play? My proxy play, quite frankly, is Robinhood. That's up 2.29% on the day. And the reason my proxy play is Robinhood, without getting into the entire thesis, is from My investing style, not only is it a company that has actual revenues and profits, and it's a product and a service that I can track and measure so I can sleep well at night knowing I own a company like Robinhood. I can actually see what I'm owning. But on top of that, they are the second largest or third largest owner of or holder of retail owned crypto. They have about $3 billion of exposure of Bitcoin on their platform. So when people start trading Bitcoin, they either come to Coinbase or Robinhood, right? Those are two of the biggest platforms in the world for retail. They start depositing more money into the Robinhood accounts, which means Robinhood's assets under custody increases, which means they can use all that money for things like cash sweep. And then on top of that, they get more transaction revenues because people are actually trading on the platform, and they have the lowest commission trading by far of every single platform. The study just actually came out on that a couple of weeks ago, comparing them to other crypto brokerages. So from that perspective, that's my proxy play. Let me know in the chat if you have a proxy play on Bitcoin or if you own Bitcoin itself and how you're kind of playing this momentum that we're seeing on Bitcoin. And we're going to get into 3M earnings and a bunch of these other earnings as well. Justin Muhammad, good morning. Thank you for being here. Happy Tuesday. Happy Tuesday to you. So this is, the way I think about Bitcoin. My whole beef with Bitcoin has been, I personally, when I buy an asset, I try to buy as big as I can. I don't like having $1,000 or $2,000 in something. I try to have a minimum of a 10 grand position. I personally cannot sleep well at night knowing I had 10,000 at Bitcoin, 10,000 in Bitcoin, given that to me, it's a little bit more of a speculative bet. And other people are fine with that speculation. That's totally fine, right? People have hundreds of millions of dollars in Bitcoin. That's great. For me, it was like at this stage, I just want to invest more in companies. I want to become a better stock picker, stock investor. And that means all the capital I have needs to go to these stocks, right? Not to crypto, especially if I don't care enough about it. And that's the one thing. If you don't care enough about an asset, even if it runs up, you can't really have FOMO because you just never cared about it in the first place. I never wanted to go deep into the rabbit hole that is Bitcoin. I wanted to do it for stocks. Now, for those that did go deep into that rabbit hole, you're up today. And you're up today because of the fact, well, here's the main reason that we got to talk about. The spot ETF approval. It seems like that's going back to the SEC. There was a Republican congresswoman last night. I forgot her name, but she was on CNBC basically saying, I have no idea why this is not approved yet. She was saying it needs to be approved. The SEC is absolutely being insane for not doing their job for approving it. And so if you've been in Bitcoin for a long time, one of the main catalysts you've been waiting for outside of the Bitcoin halving, which is going to happen in April of 2022, is this idea that once the SEC approves this spot ETF sponsored by BlackRock, there are going to be a massive amount of institutions that are going to be coming into Bitcoin, not just retail investors, but institutional investors. And that is going to be their proxy to have exposure to Bitcoin, just buying this ETF. I mean, in general, right, when Palantir joins the S&P 500, that is going to be a catalyst because thousands of institutions are going to have to own some percentage of Palantir because it's going to be one of the top 500 companies in the United States of America. That's why we saw some companies leave the S&P 500 last week and Lululemon joined. I forgot what company left. I forgot the name of them, but Lululemon replaced them because that company was not eligible anymore and other companies are. And so when that happens, you just have a lot more demand side pressure on buying of the company. So, for me, I like the proxy plays on Bitcoin. That's always how I've liked to play it, how I've liked to play it. I've got a lot more money in Robinhood than I've got in Bitcoin, and I can see myself holding that for the long term. But again, if you're a Bitcoin bull, if like you're the bullish of the bullish bulls, you are holding this thing until 100, 200, 300,000, right? You're holding it for the long term. And I think 2021 was a pivotal year to get people to be to even understand the concept of what a Bitcoin is. Now, the one thing I will say is the ETF is not fully approved. It is off the idea that it is going to be approved. So we really have to be a little, just a little cautious here that if that ETF either doesn't get approved or it has more delays, then maybe there's some reversal coming. The only reason I would say that reversal is unlikely to come is because now Bitcoin's at a new level. Right? Bitcoin was stuck. If we actually look at its chart, so 19,000 was in March of 2023. This is when Silicon Valley Bank collapsed, right? And then you came up to a range of around 27,000. Then so basically April until we broke 31 in July. This was when the S&P 500 got to 52-week highs. From April until basically 4 days ago, we were stuck at 27,000. I mean, quite literally, it stayed at 27,000. And now we broke out 8,000 points higher to the 35, 34 range. If this becomes a range where Bitcoin starts to capitulate in and it stays stuck at 34, kind of like Palantir is now starting to get stuck at 16. Palantir, by the way, up 1.79% of the pre-market at 1649. Then maybe even if the ETF isn't approved, all of the other arguments for why Bitcoin is an amazing asset to own, and there's a lot of good arguments for why it's a better store of value than the dollar. It's a hedge against inflation, all that stuff. maybe that leads Bitcoin to stay at this level. And now it might be teetering for the next couple of months at this $34,000 range, which is fine. It's going to get a bunch of new buyers. Yeah, there's going to be some new sellers, but there's a new sort of way to think about Bitcoin, just like when it was at 19, went to 27. Now at 27 goes to 34, and then maybe takes a couple months before it goes to 40, 50, whatever it means. I do think the entire market is going to get a benefit from Bitcoin going up. But the question simply is going to be, how long is this momentum going to be able to continue, and how long do traders feel that the spot ETF approval is enough of a catalyst to keep it going higher? From what it looks like, the momentum is there, the buying pressure is there, and it looks like this ETF is going to get approved. And if that's the case, Bitcoin is going to do well. And again, if Bitcoin does well, we're seeing the pre-market Marathon up 15%, Coinbase up 8%, MicroStrategy up 9%. A lot of these companies are also going to continue to do well. SOFI and PayPal are also somewhat proxy plays to Bitcoin in the fintech space. PayPal, you can buy and sell, trade crypto. PayPal up 1.4%, not bad on the day. Obviously, nothing crazy like an 8%. Crypto is not the majority of their business. And I don't even know if SoFi even allows you to trade crypto anymore. But in general, when Bitcoin does well, when crypto is up, yes, there's going to be a lot of random people selling, stuff that really doesn't matter, like NFTs and these altcoins. But the actual asset spurs economic activity throughout the entire fintech sector. And that's good, if your company has any level of exposure to Bitcoin, especially if Bitcoin really starts to do well. So Bitcoin today up there at this $35,000 range. Let's talk about some other stocks that we need to discuss. Let's go into Tesla real quick, and then we'll do some earnings. So Tesla yesterday showed an incredibly sharp reversal from that $205 level and just started to spike up, and now continuing to do well in the pre-markets. Tesla was actually at 202 yesterday at its lows. Tesla right now, $216.90 in the pre-markets, up 2.24%. I think one of the reasons stocks also rallied yesterday, when I left the stream, stocks were down, and by like 11 o'clock, 12 o'clock, stocks were up because Bill Ackman also tweeted that he had covered his bond short. So Bill Ackman was short bonds. He was infamously short bonds a couple of weeks ago, as he disclosed at the CNBC Seeking Alpha conference. And he basically said, you know what? The economy is growing slower than what we thought, which is why we're covering the short for our bond. That, I don't know if that one tweet is what sent markets rolling, but it definitely got markets excited for the fact that, okay, you got this guy covering his bond short. You got him saying the economy is going to grow slower than expected, which ultimately means stocks can go up because the Fed has a reason to lower interest rates, right? If the economy is growing faster than expected, then the fear of inflation continues to persist. So the idea that disinflation is truly starting to become one of those things that at least fund managers like Bill that manage about $17 billion are seeing in their data, you got to start to question, all right, if he's publicly tweeting this stuff and he's seeing it in his data, his team, highly sophisticated people are looking at the data and they're looking like, actually, the economy is not growing as fast as people think, and the Fed's going to have to cut interest rates in order to re-stimulate the economy eventually, and maybe it's sooner than later, then stocks have the ability to rally on that from an inverse perspective, right? Kind of the bad news is good news for these companies. So Tesla, we're seeing here at 216. The big news on Tesla yesterday was that their capital expenditures increased by $2 billion. The market didn't like that. That really wasn't the worst news in the world. And the macro took it back down to 202. Now we're seeing a reversal up at 216. Let's check on the 10-year as well, and then we'll get into some of these earnings and see how that is performing today. Shintoki says crypto needs more regulation to make it a safer investment. I think people have been talking about regulation for a long time. Personally, that's not ever been like a bear case for me. I just think regulation at this point, like if they get a spot ETF, that is one of the biggest regulatory things that could happen for Bitcoin, and that's going to be momentum for Bitcoin. At the end of the day, that is going to get a lot more buyers interested. I mean, if there's an ETF you could buy on Robinhood versus having to buy Bitcoin, you know what I mean? Like, it's just, there's so many more avenues of people getting interested into it. And I don't know if America is ever fully going to, actually regulate crypto. Why did Bill Ackman come out on a perfect 200-day moving average on the Yeah, Bill is infamous for figuring this stuff out. What else do we have here? Let me get to the 10-year. Good morning from Vietnam. Biscuit Cat, good morning. Thank you for being here from Vietnam. Okay, 10-year yield. We are at 4.848%. So yesterday we were at 5. We're down from 4.84. And as you can see in the breaking news headline on the top of this website, China reportedly outs defense minister after 2 months absence. Interesting. There's a lot of interesting stuff going on geopolitically as well. We probably won't get to a lot of it today, but China and Russia, I believe, are taking the side of Palestine. They are not taking the side of Israel. And so there's some more geopolitical tensions that we're seeing. But 10-year right now at 4.846, down from 5%. If this bad boy can inch lower to 4.6, if we can get a 4.5 or 4.6, if somehow these markets, or rather these investors, can be like, let's buy up some of these bonds and reduce this yield, we're going to see equities have some fun. But we need this yield to come down. We are not out of the clear at all on one green Tuesday for equities to do better until bond yield starts coming down. And again, I think the reason it reversed yesterday, a lot of it was this public perception that either stocks are being oversold, or if the economy is slowing faster than we thought, then eventually rates will inevitably have to be cut. Honestly, this Tuesday is making I think all of us kind of feel like maybe this end of year rally is not that impossible. I know yesterday everyone was down and sad and like everything sucked, but it is kind of crazy how the market turns. Snapchat is up 1% in the pre-markets. Google is up 1.2% in the pre-markets. And if Google and Microsoft do well, then this is also going to be a really, really good, potentially end of year rally. So let's move on to earnings and we'll talk about that. And let's get into that. So let's start off with 3M that posted a really decent earnings today. And this is important because understanding these companies and give a better leeway to understanding some of what the tech companies are going to be doing. So 3M earnings 3M is the company that makes things like Scotch tape, a lot of these consumer brands that you've probably used before all across the entire world. And they raised their full year profit forecast and they beat quarterly estimates. That headline right there, without even looking at the numbers, that is a sign to me of a good earnings season. When companies are raising a forecast, not only beating, but raising their guidance. That means, wait a second, they are seeing future growth. And 2024 is factoring on, I think, 9% year-over-year future growth for the S&P 500. We need that future growth to really fuel the justification for some of these valuations. And it looks like we're getting it from the banks and from some of these other companies. So let's put in here. 3M reported a third quarter loss of $3.74 compared to a year ago profit of $6.74 as it took a pre-tax charge of $4.2 billion. So yeah, they took a loss versus a profit because of taxes. That's totally fine. They now expect full year adjusted earnings per share to be in the range of $8.95 to $9.15 versus prior forecast of $8.60 to $9.10. So their EPS is up almost 5%, not 5%, about 1% per share, which is really good for 3M writ large. Shares are up of EM now 4%. They raised full year profit forecast and reported upbeat quarterly earnings. Diversified manufacturers able to offset slow demand with price hikes and cost cut measures. And I think we're going to see a lot of that same line. Slow demand from the consumer, which might be happening, is going to be offset by raising your prices. This is what Spotify did. This is why Spotify is doing well right now. They raised their prices by $1. They added a ton of subscribers. They're getting more revenue per customer because they raised those prices, and they cut costs. If you cut costs, you raise prices, you're going to show better results. The question becomes, is the consumer demand falling off a cliff, or do you have enough consumer demand to basically weather through any of the problems that you're seeing in the market? And their revenue was $8.3 billion, and that beat by about $280 million. So they beat revenue expectations by $280 million. Again, 3M, one of those major consumer staples, they're not doing bad. That is really good. They still have thousands of lawsuits to settle. That is correct. They did settle one of their major lawsuits for, I think, like $1 billion. But they do have other lawsuits to settle. So I don't know if you should buy the stock or not. Honestly, I've not looked enough into 3M to care about buying the stock. I just care about, are the earnings good? Because you don't want a company like 3M doing bad. Like, just as a simple example, 3M right now up to $90 in the pre-market, up 5.82%, market cap of $47 billion. They make tape, right? If people aren't buying enough tape, that means things are bad. That means offices aren't buying tape. Enterprises aren't buying tape. Why are enterprises not buying tape? Maybe they're not in the office. They don't need tape. Why are they not in the office? Maybe because they're not being as productive. Like, there's so many rabbit holes you can go down. So, and that's what I love about the stock market as well. Like, a company that sells tape can indicate so much about where the economy is going because it's all macro related. It's all macroeconomic at the end of the day. So I think those things are important to kind of look at. Let's go to GM. GM has topped their expectations as well. GM stock in the pre-markets actually up 0.55%. Let's see what they have to say amid some of these strikes, but still doing well on their earnings.
And we'll talk about the strike impact. Yep. And we'll talk about the strike impact. You definitely see it in what General Motors is announcing this morning. Let's go first off with the Q3 numbers, a beat on the top and the bottom line. GM earning $2.28 a share. The street was expecting $1.88. Revenue coming in stronger than expected at $44.13 billion. We are seeing the impact of rising costs and the cost component in terms of tighter margins. Margins for the third quarter overall up 8.1% compared to 10.2% last year. North American margin 9.8% compared to 11.2% in the same quarter of last year. Automotive free cash flow coming in at $4.91 billion versus $4.59 billion last year. GM saw profitable growth in every region around the world. That's great. We knew the third quarter would be strong. It's the impact of the UAW strike. That's what people are more interested in right now. Frankly, what investors are more focused on. In Q3, the impact was $200 million between October 1st and October 21st. The first 3 weeks of this month, the impact was $600 million. What will be the impact going forward? GM says it expects a $200 million per week impact from the UAW strike as it currently is laid out. In other words,
200 million a week means in 5 weeks, that's $1 billion they're expecting to potentially lose.
If there are more locations where the strike grows at General Motors, that cost will go up. Right now, it's at $200 million per week. As a result of the UAW strike, General Motors is withdrawing its guidance for 2023. It is also withdrawing its EV production guidance of 400,000 EVs produced by the middle of 2024. This speaks to the higher costs that they're facing and the uncertainties within the EV market as sales start to slow down a little bit, plateau, if you will, or the rate.
Interesting. Okay, so GM is up right now, not up by a lot, but it's up. And their main concern is that every week they're losing $200 million. That's a lot. That means in 2 months, they lose about $1.8 billion. That's a lot of money to be losing on these automotive strikes. Now, I'm assuming they've done the math and they said either we can lose $1.8 billion over 2 months if this thing keeps getting drawn out, or we can lose tens of billions in the future by negotiating with these people and giving into their deals. So for them, it seems like it makes sense to still get a better deal. The problem is they've beat on all their top line metrics, but in the future, this forecasted growth, it's not going to be good if you're losing $200 million a week. And as a result of that, that seems to be the reason for why their profit guidance and revenue guidance for 2024 is not looking as good as it could be, just turning red right now in the pre-markets. The Tangy Man says GM numbers are cooked. There's no way they really beat earnings by that much. No way, no way. I don't remember the last time in the stock market, really over the past year, that a company cooked their numbers outside of FTX, which is, FTX. I don't know. I mean, I know like Enron and all that stuff, but like that was a while ago. I don't remember a time where we've actually had a case of a company cooking their numbers. That's why I'm skeptical when people say cook, because now it's under so much scrutiny, so much regulatory pressure. I think it's hard to kind of get away with cooking numbers. But look, people buy GM cars. You can't deny people buy those cars. It's an American staple brand. They do something Tesla doesn't do, which is advertise. So they get a lot of, positive media because they're always advertising on all these news networks. And it's a real thing, bro. Like the reason CNBC doesn't talk too badly about drug companies is because every other ad is a drug company. So like there is a correlation there. I used to think that was fake. Like, no, I started watching CNBC. I'm like, oh my God, there's Pfizer every single second. How are they going to talk bad about Pfizer? Pfizer's paying their bills. So there is a little bit of that correlation there. And at the end of the day, people still want to buy those cars. So we're seeing some momentum there for GM, even though their guidance in the future is going to be tough. Let's talk about Google and Microsoft. So Google earnings expectations today. What are we expecting from Google? I'm expecting Google to honestly kill it and do really well. Yesterday, we talked about the bear case for big tech companies. And the bear case was essentially that Google will, or some of these larger tech companies have such high multiples on them. And also they're just so big that for them to grow at those levels again and produce that top line growth without being able to cut costs like they did back in 2021 or 2022, when it was kind of easy to cut 10,000 people because there was so much fat, just like me, right? When I was 180 pounds, it was really easy to get down to like 150. Now I'm at 144. And I worked out last night. I woke up this morning. I'm still at 144. I didn't even inch to like 143.8. Like it's hard now to get to one. I want to get to 130 or 135. That would be my like dream weight, but it's hard because now you're getting to a different level. So same thing with the Google. Here are some expectations we're seeing on Google, and then I want to talk about my Google position as well. And just I think I've told you guys what I have in Google, but Earnings per share of 145 and revenue of 75 billion. Again, the street is expecting $75 billion. If we do a little bit of some fun here, right? There's 90 days in a quarter. So 75, there's 90 days in a quarter, and there's what, 24 hours in a day. So, and there's how many, there's 60 minutes there's 86,400 seconds in a day. 86,400 times 90. Okay, so that's 7.7 million. So let's ask Siri right now. Siri, what's 75 billion divided by 7.7 million?
The answer is approximately 9,740.2597.
So Google makes $9,700 a second. That is what the street is expecting them to bring in. 1 second, boom, $10,000. 1 second, boom, that's how hefty these expectations are, and that's what they want. They want YouTube advertising to come in at 7.8 billion, Google Cloud to be at 8.64 billion, and to be profitable for the third quarter in a row, and then traffic acquisition cost at 12.63 billion. If people haven't checked in some of their stats on YouTube and Google gets about 88.4 billion visits a month, and YouTube gets about 33.4 billion visits a month. They are the top 2 visited websites on the entire planet. And then I believe Facebook is number 3, Instagram is number 4, Twitter rounds out at 5 and 6. And then you have those adult websites that no one goes to. So those round out the top 10. In January, Google announced it was cutting 12,000 jobs. We're going to see some more cost-cutting pressures there, which is going to be good for Google. And then obviously their AI features are likely going to help them in the cloud with their TPUs, and then overall making targeted advertising even more better than it is right now based on AI. The other thing that's really important about Google to remember is their share buybacks. They have authorized $70 billion of share buybacks. And because of those $70 billion, they're likely going to beat on EPS just by making sure they bought back enough stock, just like Netflix bought back about $2.5 billion of stock last quarter, in order to show to shareholders, look, like this is a company that is not only profitable, but it's cheap if we dilute you less by taking off some of these shares. So that is likely what we're going to see. I think we're going to see some momentum in the context of what we've got going on in Google. Now, in terms of my Google position, I think I've showed you guys this already, but let me share it again. This is the strategy I have on Google. And, me and Chris have been talking about this on Finance Junkies a bunch of times. I have these option call debit spreads, 175, 225 out of the money calls for January 2026. So my bet is that Google will be closer to around $225. It will be at least 175. That's my bet. Right now it's at 140. So that's $35 out of the money. And it will be closer to the high side of 225 by January of 2026. This spread got as high as like 12.50 the other day. And so, I mean, the return was, I think, almost 30% from here. My average cost for these are $9.91. And if you just subtract 225 minus 175, that's 50. If you're paying $9.91, you divide 50 by 9.91, that's close to about a 5.0.1x if it gets to 225. So I've invested, I think, what is this, $8,000 in here. So this $8,000 could theoretically turn into $40,000 if Google actually makes it to $225 by January 2026. That is my strategy that I'm playing on Google. So then the question becomes, how does Google get to $225 by 2026, which would be at this point close to a $3 trillion market cap? So we have about 2.5 years to get there. And that's why I also like these calls, because you have the potential to have a 5x, which is a great return, but you also have 2.5 years of time to like wait and see it play out. And I think the major thing is advertising revenue continues to go up. AI starts to explode by the bottom half of 2024 and 2025. We're just in the early beginnings of what they're able to do with AI. They just had a partnership with Uber a couple of weeks ago where they're now powering their AI chatbot, where they're doing a ton of stuff in healthcare. Like the Google's AI is not slowing down anytime soon. YouTube will continue to grow. They got rid of ad blockers. So that means now they're going to get even more incremental revenue from YouTube for people that were using ad blockers. And then on top of that, the share buybacks are going to make it cheap. This is exactly what Apple did to continue their growth in the Tim Cook era. They bought back a crap ton of stock. In fact, people don't know this. Tim Cook went to a meeting, I believe in 2014, with Carl Icahn. And in that meeting, in dinner, Carl Icahn said, hey, if you buy back the stock, we will reward you. That's literally what he said. Buy back the stock and we will reward you. It was a dinner. He talked about this. And then Apple, since 2014, started buying back a crap ton of stock, and the market has rewarded them. So it's a simple strategy that has been played many times, and we're likely going to see that strategy continue to play out in the context of Google. but we will ultimately see, where it goes from there. Ad block is still possible. I've never used ad block in my life, and you guys are using ad block. That's crazy. I just pay for premium, bro. It's $13 a month. It's like so much easier. But I get it. People, some people are cheap. They're like, you know what, forget it. And I think I'm cheap too, but the YouTube, I'm like $13 a month. It's all right to pay for premium. But that's gonna help Google. So that's gonna be beneficial for them as well. Okay, Coca Cola. Let's get into Coca Cola options and let's see what we've got here. Coca Cola also did really well, even though that new drug is out to like stop people from getting fat or whatever. It is not killing Coca Cola. People are continuing to drink it. Here we go. So Coca Cola earnings, we've got earnings per share 74 cents versus 69 cents expected, so they beat by 5 cents a share. Revenue of 11.91 billion versus 11.4 billion, continuing to beat on the revenue side of this. Coke reported third quarter net income attributed to shareholders of 3.09 billion, so they made $3 billion of profits trailing 12 months, around 12 billion of profits for a year, up from 2.83 billion a year earlier. So that's not bad either. They've made about 2.8 billion last year, now 3.09 billion this year. Not bad growth in the context of how big of a company that Coca-Cola is. Net sales rose 8% to 11.91 billion. Organic revenue, which strips out the impact of acquisitions and divestitures, climbed about 11%. Their unit case volume, which unlike its net revenue excludes pricing and currency, grew 2% in the quarter despite higher prices. In North America, the company's volume was flat, but shoppers bought more Coke Zero Sugar and Fairlife dairy drinks. I can definitely relate to this. I've probably bought a decent amount of Coke Zero Sugar, even though I shouldn't be doing that. For comparison, Pepsi reported that its North American beverage volume shrank about 6% in the third quarter. Look, Coke is doing good. Coke is doing good. People are drinking Coke. You want to see this as a shareholder of any company in the world. You want to make sure that people are not poor enough that they can't buy a bottle of Coke, because if they can't buy a bottle of Coke, that means Coke's not going to be sending their products to the fast food restaurants. That means people are not eating at the fast food restaurants. That means things are getting really bad if you're not going to be able to eat at like a McDonald's or a Burger King. So you want to see Coke do well. And as a result of that, it's going to hopefully benefit the entire market. Coke right now in the pre-market, this is one of Warren Buffett's top 5 holdings, is up 3%, $55.77, dividend yield of 3.4%. If you look at the 5-year on Coke, Coke in 2020 was at 33.40. So if you bought Coke during that COVID crash, you're up basically 100%. Well, it got to 63. So that's when you're up, 80, 90% right now from those levels if you bought the COVID dip. If you didn't buy the COVID dip and you bought at 52, which was a couple of days before the COVID dip, this was this was February of 2020, you're just breaking even. So in terms of 5-year performance, it's only really done well in terms of dividend yield and capital appreciation for Coke shareholders if you bought the bottom at 33. But if you had it steady at right before, that COVID crash at 55, then you're really not making any money. But you're collecting a dividend. So Coke continuing to perform well. And if you got it at that COVID crash, you're making a lot of money as well. Imnat says, OMG, a Coke commercial just came on my computer when I was on my phone here. Yeah, Coke is everywhere. Michael says, like Mexicans straight up put in baby bottles. Put it in baby bottles for the good. There's a Mexican restaurant near me, and I always go to them when I want like a really good bottle of Coke, an actual bottle, not like a can. And it just hits different, bro. I don't know if they have the original cocaine that they had back in the 1800s, but it just hits different. Austin says, what does Coke have going for them in the future? Yeah, I wouldn't buy this company for like massive capital appreciation. It's a very steady dividend. They're doing well. Again, this is one of those things that's interesting though, because the 10 year is giving you 5% risk-free. Coke is giving you 3.4%. So significantly lower than the yield you're getting on the 10 year. And you don't even have to take a bet that they're going to sell any of their products. So, I mean, I guess the reason you're investing in it is because it's a staple, it's going to do well, and you're hoping that there's going to be more capital appreciation. But again, if you bought right before the COVID crash, you have not seen your capital appreciating Coke in the past 5 years or in the past 3 years since 2020, whereas companies have literally 20x since then, right? Tesla, Google, Amazon, not 20x, but they've done really well. I think they've 2-3x. So if you were in Coke since 2020 and you didn't get that bottom at $33, you really haven't done well as a shareholder. But you got a dividend, which is great. Now, in general, Coke doing well for the economy is good for everybody because it means demand is continuing to flow. But as a stock, it hasn't really done the best. Verizon. Let's go to Verizon. So this is a company that a lot of people are interested in because of Chris Patel. So he got all of us chatting about Verizon earnings. Let's pull up their numbers. Their numbers were pretty good. They're up right now, I think, how much? 3% in the pre-markets? Yeah, 4.5% in the pre-markets. Not bad for Verizon. Let's actually go to their website and see what it is. I use Verizon for my phone, not for my internet at home, but I am a customer of Verizon. So, company ended the quarter with approximately 10.3 million broadband subscribers, an increase of nearly 21% year over year. That's not bad. That's not bad at all. Year-to-date cash flow from operations increased approximately 600 million year over year. Year-to-date free cash flow is 2.2 billion year over year. $1.13 EPS. That's up from 117 in 2022. Total operating revenue of 33.3 billion, down 2.6%. That was kind of expected since they faced some headwinds, but down 2% is not the worst thing. Year-to-date cash flow 228.8 billion, an increase from 28.2 billion. Free cash flow 14.6 billion, up from 12.4 billion. That's your number. That's where that subscriber growth is just printing cash flow for Verizon. So them increasing their subscriber count by 21% is the reason I think their free cash flow is up $2 billion in the past year. Net income of 4.9 billion, a decrease of 2.8% from the third quarter of 2022. So profits down just a little bit from 2022. Total broadband net additions of 434,000, representing the fourth quarter that Verizon reported more than 400,000. So they're beating on some of those expectations. 72,000 Fios internet ad additions, an increase from 61,000 last year. Wireless service revenue, this is the stuff people pay for their iPhones, 19.3 billion. That's up 3% year over year. Postpaid phone net additions of 100,000 and total retail postpaid churn of 1.15%, which is not too bad for Verizon. Look, these results aren't horrible. Again, I have to go deeper into the company and try to understand them a lot more. But the only thing that's down is their net income and their top line revenue growth. The big thing to me is this subscriber growth. The more they grow these subscribers, the lifetime value of a Verizon subscriber, I imagine, is more than usual because, like, I'm not quitting Verizon, right? Like, and same thing with AT&T, T-Mobile. Once you get them, if it works, like, do you really want to go through the trouble of setting up a new one? Probably not. So Verizon, AT&T, and T-Mobile own this market, and once they get you in, they get you in. Like, I just upgraded my iPhone to the iPhone 15 Pro Max, and Verizon had a great deal that gave me $800 to trade in my old phone. So this new iPhone that is like amazing every day cost me less than $400. So I'm not leaving Verizon anytime soon. Remember, the reason I think people are interested in Verizon is that the dividend yield is 8.56%, which is extraordinarily high for a company that traditionally goes at 4%. Well, why is the dividend so high? Same reason with Truist. The reason the dividend is high right now is because the stock has catered. Stock is at $33. Book value is around $42. And the sort of fair value, if you give it a little bit of a multiple, is $50. So if you are correct on your Verizon thesis, if you believe in the company right now, up 5.22%, you will get not only capital appreciation from 30 to 50, but you're going to get that sweet dividend at the same time, 8.47%. And that's kind of, the same story that we have on a company like Truist, I believe unfairly got decimated by the entire banking sector. And that's why their dividend yield right now is substantially higher than that 10-year. Right now, it's 7.7% you can get for owning Truist stock. And then so the question becomes, all right, if I'm going to get 2.7% more than a 10-year or than my Robinhood APY, why would I invest in Truist? And then it goes down to the business and the fundamentals of the business. And to me, I think the fundamentals are fine. If interest rates come down lower, you're going to see a lot of these companies that were impacted by interest rates and solely down on the basis of the fact that they have loans on their books that are showing these paper losses. Those paper losses don't become paper losses. Those stock prices have to go back up to their kind of fair value. The question is, when is that going to all play out? And maybe it's soon, maybe it takes months, maybe it takes years, but that is the thesis. And same thing with Verizon. Remember, the reason Verizon also got hit in the summer, I remember I was in New York City when this news came out. Wall Street Journal published a report that all their cable LEDs are like toxic and they have to spend billions of dollars to replace this stuff. And that's what literally tanked it that day from like 45 to 32. So if that news is eventually going to be resolved, maybe it comes back up. I mean, I have to do a lot more research on it, but maybe that is a bull case for why Verizon is potentially cheap right now. Imnat says, what about the rumor of Amazon phone services? I don't know if Amazon's eating Verizon's lunch, right? Like if anything, I think there would be a partnership here. Amazon is a great company at coming in and like undercutting people, but Verizon, I would never switch my phone from Verizon to Amazon. Even if Amazon was cheaper, all of the work I would have to go through to set that up and to like get all the, it's too much for the consumer. Like I think Carlos was talking about this on Finance Junkies last night. Who's going to buy a microinverter on Amazon, even though they're sold on Amazon, right? Like, no, you're going to buy Enphase. And so as a result of that, to me, I don't know if Amazon's a competitor here. If anything, I think I see them as a partner to help Verizon and AT&T. I don't think they're decimating their business in the phone market. Enphase, as the market is very green, Enphase is up 0.59% in the pre-market. Their earnings is in 2 days, so we're going to see what happens to Enphase and ultimately how they're able to recover from that SolarEdge decline. But Enphase right now up a little bit green in the pre-markets. Ryan says Amazon doesn't have the infrastructure. Yeah, I agree. I don't think at this moment Amazon has the infrastructure. And some people say because Verizon sucks. Look, in my area, Verizon is good. In your area, Verizon might suck. I totally understand that. But for me, Verizon's always been really good. And AT&T is like not the best, right? Whereas other places in Texas, I think AT&T is great. So it's really just a question of geographic locations and how it impacts. All right, folks, we got about a minute until the market opens. The headline story of the day, Bitcoin, $34,450 a coin, up 4% on the day, up about 11% in the week. If you own Bitcoin, you are up. Your portfolio is up. If you own MicroStrategy, Coinbase, Marathon, Riot, Robinhood, or PayPal, you are up. If you own the latter four, you are up a lot more. Robinhood and PayPal are up just slightly, I think, correlated to a little bit of Bitcoin, but Marathon up 13%, Coinbase up 8%, Riot up 12%. That Bitcoin ETF of stocks is doing very well today, and we're seeing some upside momentum on Bitcoin. 30 seconds until the market opens. Today, I am the most interested in seeing how Enphase will perform in a very green market if the market gives them a little bit of love. Tesla, seeing if they can continue their momentum back into this 220 range. They were $2 away from being under 200 yesterday, so let's see if they can continue that. Amazon, I want to see. Google and Microsoft, I want to see how they perform before they have earnings. After hours, S&P 500, let's see how that goes. And Palantir, let's see if we can stay in that $16 range as well as we get into the market open. All right, here we go. It is 9:30 a.m., October 24th, 2023. The stock market is once again open. Wake your ass up. Here we go. The stock market in the United States of America is once again open for business. Palantir, $16.51, up 1.98%. It was down at $15.30 yesterday. Actually, $15.20 was low. So, it got stuck in that $15 range and then bounced right back up. $16.50 right now we're seeing for Palantir. Tesla, $216, up 1.8%. Not bad at all for Tesla. Again, it was at $202 yesterday. So we're seeing some momentum there on Tesla at $215, and it's inching towards the green. PayPal, $54.07. We had a new 52-week low yesterday at $52.65. PayPal right now at a $59 billion market cap, trading its stock price a little bit under its actual market cap at $54. So we will see how PayPal continues to get some momentum off of this Bitcoin craze that we're seeing here. Robinhood, this is definitely because of Bitcoin, $9.40. This stock was basically under it was under 9. It got to $8.98 2 days ago. Remember, Robinhood has $3 billion of Bitcoin exposure. Transaction revenues will go up when crypto goes up. Assets under custody will go up when crypto goes up. And general downloading of the app and retail wanting to participate in the rally, FOMO, etc., will go up when Bitcoin goes up. We'll actually check on their app store rankings in a second. But Robinhood up now 2% on the day. MicroStrategy up 7.53%. Coinbase up a whopping 7%, $82. It's actually kind of funny because Cathie Wood bought 259,000 shares of Robinhood yesterday, and she sold 32,000 shares of Coinbase. And so it's like, look, even if she was rebalancing, I just don't get, why would you sell Coinbase when Bitcoin is up 5% on the day? It's not like Bitcoin went up after hours. Bitcoin was up, or Bitcoin was at least inching towards 30,000, 31,000 during the regular market hours when she trades. And it's like, out of all the stocks you could sell, you sold Coinbase when Coinbase is correlated with Bitcoin. That was just such a confusing sell to me. And it wasn't like 5 shares. It was 32,000, which is a substantial amount. And Coinbase is like her third largest position. So that one was just really confusing to me. But nonetheless, she bought Robinhood, sold some Coinbase. Marathon Digital up 11%. Riot up 9%. Bitcoin up 4% again, 34,463 on Bitcoin. S&P 500, 422, up from 417 yesterday on the lows. Palantir 1636. SOFI 745, up 2.62% of the day. We have earnings in 6 days for SOFI. Hopefully we get some momentum up towards that $9 range on increased member growth and increased deposits, which I don't know if we're going to increase or beat our member growth from last quarter, but I do definitely think deposits are going to be fine. And that should hopefully increase some of that EBITDA guidance and revenue guidance as well. ARK Innovation, $36.91. SolarEdge, $86. This is a little bit higher from the $78, or actually the lows were $74 last Friday. So Market recovering a little bit, buying up a little bit of Solar Edge at these levels. Clean Spark at $4.65, up 9.29%. Lockheed Martin up today at $4.47. Raytheon had earnings, and they're up 7% as well. Now, their earnings weren't even that good from what I remember. I have to go into the numbers. Raytheon, another defense manufacturer, they missed on a lot of things. I think they increased their guidance, which is why they're up 7% as the market opens. But we'll check on their earnings in a second. Again, Raytheon, a defense contractor, and the war that we see going on right now is likely going to be good for these defense contractors because there's going to be more money there. United is up, American is up, Delta is up, ASML is up on the day. Nvidia is down on the day, 429, but it's up from 412. Fubo is up, NASDAQ 13,081, SMCI 256, Intel is up, Unity is up. We've got a lot of green. Look at that. Google is up 139, Uber's up 43. Walgreens is up. Square inching higher. Square, this I'm surprised this one's not up more. The company's named Block, for goodness sake. So you would imagine Bitcoin takes this one a little higher, but Square is at $45, up 2.69% of the day. Look at all the banks. Look at these banks. Wells Fargo is up. JP Morgan is up. Citigroup is up. Bank of America is up. The regional, the XLF ETF for the big banks is up about 1%. And then let's look at the regional KRE. The regional is up 0.44% as well. I don't want to get too excited in saying we have some momentum going, but this 10-year inching a little lower makes me feel like we have some momentum. And if Google and Microsoft, if Sundar Pichai and Satya Nadella, if these two Indian men just come out today and they show how well they've been able to lead the company, and they show that brown boys can save the United States of America, then we will have a fun Wednesday morning tomorrow when the market opens. Our fate and destiny is on two Indian men to show up and basically show that, look, we didn't found the company. The white guys founded the company. They made all the things happen, but now we're running the company. And in order to make things keep happening, we've got to run the company. And if they can just run the company, not into the ground, Microsoft and Google might end up taking the market a little bit higher because, again, these are the tech companies that the market wants to see, specifically AI revenues, explode. Market's expecting about $59 billion, up 8% year over year from Microsoft at $330. Again, if they announce some more stuff, share buybacks, you could see Microsoft continuing to do well as some of their other AI peers have gotten some premiums. And Google, market's expecting $75 billion of revenue. If you weren't here in the beginning of the market open, we did some math. The market's expecting $9,700 per second in the past quarter Google generated in top line revenue. So if Google's able to perform, we're going to see momentum on the stock and momentum writ large for the company. Now, Snapchat is also reporting today. If Google and Microsoft do well, potentially Snapchat might get a little bit of a benefit from that. Snapchat up 2.3%. Their increased DAUs and MAUs is likely going to take them higher today because of increased ad revenue. And if Google also does well, Meta is going to probably show better numbers tomorrow. On top of that, Amazon and their advertising numbers are going to do well on Thursday. So we need some results. I mean, we really need some results. If Google and Microsoft shit the bed, then it's not going to be good. So, Satya Nadella said he was inviting Google to the dance, or he wanted, the 800-pound gorilla to show up to the dance. Google showed up to prom, and they've become prom king and prom queen. And Microsoft's now just got to show that they had a chance to win the prom king and prom queen, because they're definitely not winning it in the context of search. ChatGPT is not killing search, but ChatGPT has a lot of other ways to monetize via their OpenAI API. I'm actually doing some stuff with the OpenAI API. I'm not going to reveal too much, but I've been playing around with some stuff, some little LLM side projects that I was like, this is kind of cool. I've been getting into building some of these LLMs. Building an LLM is actually not that hard as people think. I've literally I'm almost 50% done of building an LLM in the past 2 days. All of this stuff is on the internet. It's not that hard to build this stuff because these APIs are so accessible. So, and the only reason I bring this up is because I'm kind of working on something on the side and I'm seeing kind of how it could interact. And the fact that all of these things are available, the fact that I can just go to Microsoft and just set up an open API key, and then boom, I have access to GPT for free. Imagine one day I start paying for it. It's just incredible the amount of ways they're monetizing and building out all these sources of infrastructure for these AI products, and essentially the AI infrastructure to exist to power the back end. Now I'm understanding why OpenAI is asking for a $90 billion valuation, because you've got millions of people like me trying to build these little LLM side projects, and then you got obviously much bigger companies using their OpenAI APIs. They're paying them hundreds of thousands of dollars a day to leverage this type of stuff. That's top line growth for OpenAI that's substantial, even if it's not search advertising, which is what Microsoft really wanted to win. They have a lot of other ways to monetize as well. Find me a podcast that talks about Palantir. So there's obviously a lot of different ways that some of this LLM stuff is being played out. And I think we're going to see that in Microsoft in their earnings as well. Okay, cool. So that was some of the stuff we got on the earnings. Market is absolutely green, which is great for today. Let's get some expectations for Microsoft and Google as well from the street and see what they have to say. And then we'll move on to a couple of other stories I want to cover.
Reports after the bell. As an investor, what are you focused on?
Yeah, so look, Microsoft and Alphabet have both been caught up in the AI, mania this year. So both the stocks have done very well. So I think first and foremost, investors are going to be looking for with Microsoft, is the AI hype coming through business results? Are we seeing meaningful growth because of AI? And if not, when is this going to occur? So I think first and foremost, there's going to be a lot of focus on AI, as you mentioned. Second, cloud is important. Before the AI hype, before ChatGPT became part of the lexicon, it was Azure Cloud that was driving results at Microsoft. So we're going to continue to look for whether or not Azure is not only continuing to grow, but we think there's a good chance that we could see an inflection this quarter. One, because if you look at the last 4 quarters, Azure has been slowing sequentially, and I think we might see a bottom here in this quarter. Two, the more we move to AI workloads, the more we're going to see these hyperscalers like Microsoft Azure probably see an uptick in their growth because these AI workloads require more cloud computing. So Azure is going to...
That's a really big point. This is literally exactly what I said 2 minutes ago, right? Not only has Azure been slowing down the past couple quarters, so we're likely to see a little bit of pent-up demand and a spring towards a higher quarter after 4 quarters of inconsecutive growth. But on top of that, the AI compute that companies around the world are using, leveraging things like OpenAI and Azure, is going to cost more money for those companies, which means Microsoft's making more money. It's not like you're just paying for cloud storage anymore. Now, if you're leveraging an LLM application, any type of AI software, you have to pay more for the compute. It's still relatively insignificant, right, in terms of the overall cost, but it's more than just paying for storage. And Microsoft, when you multiply that by thousands of companies using their APIs and Azure cloud services, they're going to make more top-line revenue because of AI. And that, I think, is a massive bull case for Azure, even if it doesn't show up in this quarter, but going into the future.
Going to be important. And then I think third for Microsoft that we're looking for is just commentary around the Activision Blizzard deal. Look, it's now closed. What's Microsoft going to do with it? Where are we?
All right, so you're looking at a wide range of things, Jason, in general. I do want to ask you about the valuation of Microsoft, trading at a 31 times forward PE. Where have you been at in recent months? Have you been adding to your position, trimming, and what would you need to see from this report with this valuation to add more to this position?
Yeah, so we don't typically trade around earnings reports. We haven't been adding to the position. In fact, we've trimmed the position into strength recently, but we still have a meaningful position in Microsoft. We've been owners for a decade, and we're not looking to change our core position meaningfully. We still think it's a great secular growth story. But as far as valuation is concerned, look, it is expensive. I mean, as you noticed, trading at 31 times forward earnings, which is historically a couple of turns above its average PE multiple. So I think in order for the stock to continue to move higher, we're going to have to see a reacceleration of cloud. We're going to have to see some really exciting news around or business results around AI. So, we're somewhat neutral over the near term on Microsoft, despite being long-term bullish.
Neutral.
Okay, we'll go back to this in a second to get his Google expectations. We've got some breaking news, folks. We've got some breaking news live on the market open. The breaking news is, it's actually breaking news. SOFI has increased their APY to 4.6%. There you go. 4.6%. It was stuck at 4.5. Now we're at 4.6 on SOFI. Now, this actually matters. I know people think 4.5 to 4.6 is not that important, but why does it matter? Number one, that means they're confident in their growth, that they're willing to decrease their net interest margins because they obviously have to pay for every cost of, they have to pay, the cost of capital is going to increase, right? If you bring in $100, instead of paying 4.5 for that 100, now you have to pay 4.6. They are confident enough in their growth, whether it's on members, cross-sells, Galileo, whatever it may be, that they're willing to pay even more for customer acquisition. which is a really good sign. Robinhood, obviously incredibly confident in their growth. That's why Robinhood's at 4.9%, because they just know that, that 4.9%, they're going to make it back they're going to make it on the back end, which is how all these companies operate, right? If I give you 4.6, I'm going to make at least 4.601 later off of your money. SoFi has been increasing that net interest margin. So this is a decrease if you go from 4.5 to 4.6, because you have to pay more for the cost of capital, but they are confident enough in their growth that they're able to afford it. So that's really good to see that SoFi has increased that. And right before earnings, to me, that's a sign that earnings went well. That's how I'm thinking of it. SoFi right now, up 3% on the day, not bad at all. And the other reason this is good, even if you don't own SoFi as a stock, by the way, put in the chat if you own SoFi. I actually want to see how many people here actually own that company. The other reason this is good is because this means there's better economic activity going on in the broader markets. When companies can afford to start paying even more for the cost of capital, like for example, if SoFi's loan business was crapping the bed, if they didn't have member growth, if they couldn't, upsell, cross-sell, if they couldn't originate more student loans, they could not afford that level of an APY to attract a customer. The fact that it's increasing means the overall business is doing well. And if their business is doing well, they're a bank. That means the general economy, I know they're a smaller bank compared to like a JP Morgan, but at least in their ecosystem, the general economy is starting to have momentum and pick up, which is why they're able to offer that yield. So that's really good news to see in the context of SoFi increasing to 4.6%. Tesla right now at 218, up 3.2% on the day. Tesla, amazing reversal from 202 yesterday, right now at 218. The market seems to be buying some of those shares. 14.59 million shares have been traded on Tesla. More of them have been bought than sold. Right now, market cap at $695 billion. Tesla at $219 on the day. Bitcoin, 34,464. S&P 500 inching higher towards 423. Palantir, 1663. 6 million shares have been traded in the past 14 minutes. Right now, up 2.5% of the day. SoFi 748. ARM at 51. Instacart at 2485, still below the IPO price. ARK at 37. Look at ARK, up 4% on the day, and that's mainly because Coinbase is up. ARK has a very heavy position in Coinbase, so we're seeing ARK go higher. Enphase is funny to see flat. That is incredible. That is incredible. On a green day, one of the best green days we've had, Enphase is flat. Absolutely incredible. The market is just not excited for Enphase. They are waiting for those earnings, because if they don't get those earnings that are, somewhat good, market's not going to be exciting, or the market's not going to give the premium. Imnop owns SoFi. Brian owns SoFi. Mikkel owns SoFi. Angelica owns SoFi. Somesh owns SoFi, about 100 shares, 30 leaps, 750 shares, 1,400 shares of SoFi, 200 shares of SoFi. That's still amazing. 200 shares, 5,000 shares. Wow. So we've got people that are in 2025 leaps. I basically got 20 grand in SoFi. That's my position. So for those that don't know, if you were here in the OG days of the market open, what I did for my sister is I bought these option strategies that would bet SoFi is going to be at least $12 by January 2025. I bought them very cheap for my sister. She gave me 12 grand. I put it in there. That 12 grand turned into 24 grand. And so in August at the top, at like August 1st, July 31st, whatever it was, I sold half of that. So I took out her initial capital. And so I doubled her money and then gave her back the 12 grand. And now she has the rest of the 12 grand just like letting it ride, right? And that 12 grand, I think, went down to like 7 grand as SoFi collapsed aggressively over the past couple of weeks, but now it's starting to come back. And that 12 grand can eventually turn into like 30 grand if SoFi gets to $12 by January 2025. For me, I have a little bit more out of the money options. I have $15 out of the money options. So if I inches towards $15, my 20 grand will turn into 100 grand if that happens. And so I'm betting, look, I think by January 2025, SoFi is 15. Could I be wrong? Yes, especially if 2024 we have a cataclysmic recession, then I'll be wrong. And I'll see after earnings. I want to see the numbers, because if earnings are not as good, maybe I got to take a little bit off. Maybe I got to take some profits on this and just buy the shares and convert the options gains. Because right now I'm still up on the options. So maybe I just convert them into shares, because again, even at SoFi's collapse from 9 to 7, I bought the options so cheap. Like, this is one of those good things about timing. Like, they're still up, even though SoFi's collapsed dramatically. So, if I goes to 15, I make $100,000 by January 2025. If SoFi even gets to like 12 or 11 or 13, I still make like 80, 90 grand, right? But it's still a risk, because in 2024, you have no idea how the market ends up turning out. So we will see. 5,700 shares of SoFi. Yeah, a lot of people have SoFi. I'm not going to be live on SoFi earnings. I'm going to be in Vegas. I'm actually flying out this Thursday. We're going to have a Finance Junkies meetup, so a lot of fun content coming from there. So I will not be able to go live. Tanner will be live, but I'll probably be in the chat when I will probably be hungover on October 30th morning listening to Tanner tell me if I've made money or lost money today. So we will see. In an election year, it's hard to believe that there will be a big recession. That's another thing, man. This 2024, I think, is going to be better because of that election year. Like, it just doesn't. And if you look historically, we don't crash in election years. It doesn't. But then I'm looking at some of the banking sector and I'm looking at inflation, and you can make a really good bear case for the market. You can make a phenomenal bear case for 2024. You can also make a really good bull case in the context of inflation coming down. The economy is going to break a little bit. Fed's going to have to lower interest rates. So even if the economy breaks, it's not going to last for a long time. Bitcoin's going to run high. Like, I'm kind of divided on what's good, what's bad. If I had to guess, I would say the market's going to be okay in 2024. I don't know if we have like a 5,000 level S&P rally, but I could see the argument for why the market collapses in 2024 as well. And on a green day, it sounds crazy to say the market collapses. But yesterday, if I was saying, oh, the market might collapse in 2024, more people would think like, yeah, it probably could. Because when you're red on your stocks, you feel like it's always going to go down. When you're green, you're like, it can never stop going up. And that's why exiting the casino and managing when I get out of some of these options and strategies, that's also a really important thing to do. I know a lot of people are thinking sell all their stocks by the end of 2024, by the end of 2023, take what they get from the end of your rally, and then 2024, just sit in cash and see what happens. And that's kind of what people did in 2022, but they did it for a loss. The difference, because we had a bottom in October last year, the difference this year is that people would probably be taking profits in 2023 and, making some money before we see what happens in 2024. That's not true. It crashed as Obama entered office. That's actually a good point. Now, granted, that was the great financial crisis. So that is a good point. But if we're not in a GFC type of moment, maybe the market will be okay. Granted, you do some research, you hear some people talk, they say a GFC type of moment is coming for 2024. The reason I have been relatively bullish and been more bullish on stock equities than anything is because companies are doing well. And for goodness sakes, we had a recession. 2022, like, I don't know, does the market really want Palantir to go back to $6? Does the market want Google to go back to $85? Right? Like, does the market want Spotify to go back to $66? Right now it's at $150. Like, even if you say, all right, we're going to see 10%, 20% correction, we would have to see 40 to 70% corrections in these equities that already corrected. Do we want Meta to go back to $88? And these companies have grown substantially. And not only have they grown, they've cut a crap ton of fat off their balance sheets just in terms of excess costs that they don't need. So companies have cut costs. Revenues have grown. This isn't fake. This is real, right? For valuations to not even be somewhat at this level, even if you can argue this is a little bit overvalued for the broader market, to see them to go back to 2022 levels is just insane, because 2022, we had that recession. So I just don't know if we have that cataclysmic event that people are expecting. And if we do, obviously, not going to be the best for the markets. But if we don't, then maybe 2024 is going to be really good. And there's going to be some fun times coming into the markets. Let's hear Goldman Sachs talk about interest rates and what they expect going forward into 2024. Benny says, I had a dream, and when I woke up, I saw Tesla at $3, and I was hesitant whether to buy still. Dude, I had a crazy dream last night as well. It's just, I've been having some weird dreams. But all right, here we go. Interest rates and what Goldman Sachs thinks we can live with.
Rising rates are impacting the capital markets. We want to bring in Beth Hammock. She is co-head of the Global Financing Group at Goldman Sachs. She's former global treasurer of the firm as well. And Beth, let's talk through what this all means. Before we even get into the rates, let's talk about what we think is coming, because you had Bill Gross saying that he thinks we're headed for a big downturn in the economy. You had Bill Ackman saying the same thing. You look at a lot of different measurements. We were talking about the, subprime auto borrow 60 days plus past due. These are some concerning things that are starting to line up. How does that play out in what you're seeing in the markets?
Sure. When we step back and think about where the interest rate markets are, you have to look at all the Fed speak we had last week, where the Fed is telling you that they've done most of what they want to do for the year. They've taken rates up pretty significantly. We're in a restrictive territory. And the Fed speak you've gotten is basically saying they're around where they need to be. Maybe there's one more hike. Maybe we're done, somewhere in around there. But the back end of rates, which has really been the mover over the past couple of months, has really put pressure. And part of what you heard in that Fed speak is that this higher interest rates in the back end is going to substitute potentially for more of those hikes that they need to do in the front end of the marketplace.
But higher for longer, do we believe that? If things roll over and they keep rates high, what does that mean?
Well, that's the fundamental question, is the economy going to keep holding up? So right now, what we've seen is that inflation has actually stayed reasonably elevated, coming down off of its peaks, but still reasonably elevated. The unemployment rate still below 4%. That's a full employment type picture that you're looking at. And broadly, the consumer looks pretty healthy. You're definitely seeing some weakness at the very bottom end, as even Coca Cola talked about at that bottom decile. You're seeing a little bit of that weakness. But overall, the consumer picture looks pretty good. So our economist, Jan Hatzius, has had a great call that we weren't going to be entering a recession. And our view is that that's going to be the case.
There you go, folks. The suits think we are not entering a recession because the consumer is strong and we can stay within a 5. Here's the thing. If we can stay within a 5% interest rate environment and the consumer is strong and earnings go up, then like the interest rates don't fucking matter anymore. Like they really don't, because the market has just basically looked past them and said, we're moving forward. And maybe that's bad for inflation. I don't think that's bad for inflation, given some of the data we're seeing. But if that's not bad for inflation, if inflation comes down with interest rates still being this high and unemployment doesn't tick to like recession levels, 2024 is going to be phenomenal. And that's what Goldman Sachs is basically saying here. But the question is, are they right?
We're going to stay in a pretty healthy market through most of 24. And the Fed won't need to cut rates until at the earliest, the end of 2024, and only very slightly. So if you step back and think about rates in a broader historical context, this period where money was free from 2008 to 2022, these zero rates, a lot of people grew up with that and they think that's the norm. I grew up in the 90s, so I think that a 3 to 6% yield curve, that to me feels like normal. And so this new 5% regime that we're living in, I think that could be sustained, and I think this could be the new normal on the forward.
You know, that's actually a good point. I mean, that I know it's a talking point a lot of people have said, but I don't think we talk about it enough. Since 2008, we've been living in a 0% interest rate environment because we had a financial crisis and we need to stimulate the economy. And as a result of stimulating the economy, we needed a ton of low interest rates, and then we just kept those low interest rates. But if you grew up in the 90s or 80s, interest rates, mortgages weren't, my parents got a mortgage for like 3.2%. Mortgages were on average 5 or 6%. So that time we've kind of gone back to, and the world survived in the 1990s when interest rates were at 5%, even if we had 0% for a very long time. I think the problem is, and I think the good thing here is that because we've raised interest rate, we flushed out all the bullshit out of the economy. What was the bullshit in the economy? People buying a picture of a rock for $2 million. That was some bullshit, right? Like that was stuff we had to get rid of. Some of these altcoins, Shiba Inu, there was a guy who put in $1,000 and had $5 billion of a return off that $1,000 on Shiba Inu, because that's how some of these cryptos were going up. Now, I don't know if he was able to sell it. If you look it up, there's a Business Insider article about it. Because if you sold, you would like collapse the entire coin. But that's the type of return he was seeing, right? So that was all nonsense, and that's gone from the system. You had startups raising, at $30 million valuations for having an idea in 2020. And I know this because I was trying to raise money, and I saw some of my peers that were raising, like absolute insane, stupid ideas that have closed down. And they would get $30-40 million from a VC because like they didn't, like $30-40 million is like, you're getting close to like $100 million. $100 million is close to like public company valuations for an idea itself, right? No prototype. So a lot of these things have been kind of shut down because money has exited the system, liquidity is left, and now you're left with higher interest rates and capital being allocated in a more responsible way. If that's the case, if companies continue to do well, a SOFI becomes GAAP profitable, a Palantir shows year-over-year revenue growth, a Google shows AI is a headwind or a tailwind for them versus a headwind, and they're able to capitalize on that. Same thing with Microsoft, Amazon, Apple. 5% interest rates, I don't feel like matters as much as we thought it did before. Now, granted, the economy's got to perform in order for that thesis to be justified, but we've got to see what happens. Here's a good comment by Matt. Matt, I'm happy you brought this comment up as well, because this is the bear case to humble a little bit of what I'm talking about right now. We are drowning in debt in the United States of America. We are paying $2 billion a day on the interest of our debt. Oh, by the way, here's another reason interest rate. Like I saw some analysis yesterday. At some level, we would be paying a couple $1 trillion of interest. We only collect around $4.7 trillion of revenue from taxes in the United States of America. We only collect about let's call it $5 trillion. $5 trillion of taxes. So to have to pay half of that or 1/3 of that in interest payments, there's just no way. Like we're gonna have to lower rates. It's like we like the Roman Empire will not be an empire anymore. We will collapse. I just can't imagine us, unless the world just looks past that and they're like, the United States could be 50 trillion in debt. It doesn't matter, because now we're estimating, I think by the latter half of 2028, we're going to be in $50 trillion of debt. That's insane, bro. That's insane. And we don't even have a Congress that can work together. We still don't have a Speaker of the House. For those that don't know, if you're international, the United States has two parts of Congress, the House of Representatives, the Senate. They work together. They pass legislation. The president signs off on it. The House of Representatives need a leader. We haven't been able to vote for a leader because the House of Representatives are some children that are playing in a sandbox and like throwing sand at each other. They can't figure out and if we don't fund the government, which we have a funding bill coming up as well, then we're not even going to be able to allocate all this aid to Ukraine and Israel. So the U.S. having more debt is definitely one of the clouds on this idea that the economy will continue to do well. I know the argument, and I've been a proponent of the argument that U.S. debt doesn't matter because we have the best military in the world. Our debt is better than anyone's debt. I get it. But at some level, you're going to start thinking, I think investors would start thinking, hey, maybe China's debt is better. Maybe Russia's debt is better. I know that's crazy to say, but if the United States economy continues to just drown in debt, at what point do people say, baby, I'll look to other countries that are growing, that are not as big as the United States, but have better debt to buy? And so that is one of those things that we have to think about long term. But until that gets really bad, maybe 2024 ends up being one of those amazing years for the stock market. Tesla at 220 as well, up 3.7% of the day. Tesla doing great. PayPal 54.37 up 1.72%. Robinhood up 4.3% on the day. My Robinhood calls are back in the money. $9.56 on Robinhood. Remember, Robinhood at an $8.7 billion market cap. $7 billion is cash. You're paying for cash, which is, cash is cash. Cash is generating returns, especially in a high interest environment. So you're literally buying cash, and then you're paying $1 billion for a brokerage that is GAAP profitable. I think the brokerage is worth $1 billion, right? I would imagine it's worth at least that much, given they have $89 billion of assets under custody. So not bad for Robinhood. S&P 500 423. Palantir 1673 on the day, 27 cents away from $17. I'm really surprised at myself that I did that math that quickly. I did 17 minus 1673 and I said 27 cents. I'm actually very proud of myself that I did the math that quickly. Most people don't know my mom is a math teacher, but I'm not that good at math. I was not that good at calculus in high school. Math was always, it was one of those things I struggled with, even though I had a math teacher as a mom. But I got that math correct in the subtraction. So now we're 48 cents away from $17, up 2.54%. Palantir at 1662. SoFi 750. PP Meet Kevin 2191. That's up today, 1.34%. So if you see Tesla coming up, that's good for Meet Kevin's PP. Meet Kevin now owns $4 million worth of PayPal. We found that out yesterday going through his ETF. And he owns a crap ton of Enphase as well, about 14% of his portfolio, 6 million shares of Enphase. Meet Kevin, $21, and Arc Innovation at 37.66 as well on the day. Let's go to Raytheon earnings. Let me pull up those numbers. Raytheon is up 7% on the day, but we don't know what their earnings looked like. Okay, so Raytheon beat Q3 estimates. Now I know why Raytheon is up. This is the obvious reason Raytheon is up. So Raytheon just decided to buy back 10 billion shares. There you go. That's why they're up. They approved a $10 billion share repurchase. I'm telling you, this is what Google and Microsoft are going to do as well. They're going to say, hey, we're purchasing more shares. You're going to get less diluted as a shareholder. Buy the stock. And people are going to buy the stock. It feels like that's going to happen. 2.48 billion operating loss. The Collins Aerospace unit rose 22% to $903 million. They have a lot of subsidiaries underneath Raytheon. Overall, third quarter adjusted profit of $125 a share. They beat the street estimates of $121, and revenue rose 12%. Not bad. They beat expectations. $18.95 billion versus $18.59 billion. That means trailing 12 months, Raytheon is doing about $80 billion of revenue. Not bad at all for Raytheon. And then on top of that, unfortunately, you've got a war going on right now, and that war is going to make defense contractors a lot of money. In terms of some of the geopolitical news that's going on and some of the stuff that I've seen, let's cover spot earnings as well, and then we'll go into Raytheon. Spotify did well today as well. Spotify up 9% of the day. The main reason Spotify did well is two reasons. Number one, their adjusted income is finally positive after being negative for a long time. So I think they put up $32 million in profits. They haven't showed a profit in like over a year. So that's really good for Spotify. Their MAUs grew by about 22 million users, and they added about 6 million paid subscribers. That was really good for Spotify. And then the other thing is that their gross margins. That's the biggest thing. Their gross margins went from below 24 to 26.4. So they finally inched above that 26.4% range on Spotify for their margins to go up. Now, look, I don't own Spotify stock. I've never been really bullish about them because the biggest problem to me with Spotify is that at the end of the day, they're beholden to the record labels, and those record labels own the majority of the rights to their revenue, right? So Spotify makes like $20 million and they do like 10 to $12 billion of revenue a year because 80% of that revenue goes to the record labels, or 70% of that revenue goes to the record labels. So to me, I've always seen them as like, unless they figure out how to monetize other ways outside of music, which is the primary reason people come to Spotify, they're not going to be worth anything substantial in terms of like a real company that grows to be this massive social network. Their bet is the podcasting bet. And I personally just don't see podcast advertising as the biggest driver for Spotify. Maybe they introduce other verticals, audiobooks, maybe. But music is a at best 5% net income positive business for them, which means the question becomes, if you're buying Spotify, similar to buying Netflix, you have to hope that subscriber growth continues to be monumental and the monetization of that subscriber growth is monumental. The bear case on Spotify is that Netflix is the best streamer out of all the streamers and they have the best content. Spotify is, you could argue, the best music streamer in terms of UI and all that stuff, but they don't have the best content. Everyone has the same content as Spotify. So unless you love Joe Rogan, like, yeah, Joe Rogan's exclusive. But outside of that, there's not really a core content moat that I see to Spotify. So stocks up. Numbers are great on their earnings. You can't deny the numbers. The question has become long-term. Do you think those numbers can continue to do well? Benny says, I imagine sees Spotify doing well. If Spotify crashes, there's more room in the market for audio. Obviously, yes, I have a competing audio startup to Spotify. But contrary to what people believe, I like Spotify doing well, because it just proves there's a bigger demand for audio. Like Audible, I think got 30 million downloads last month on the iOS App Store charts. I'm actually going to pull up those charts so you guys can see some of those in a second, because I think those will be interesting to look at. And that's good. You want Audible, you want Spotify. I mean, let me know if you remember this in the chat, if you remember this company, SoundCloud. SoundCloud is number 136 on the top iOS charts in the world. Not in music, not in entertainment, in the top iOS charts in the world. So when you've got Spotify, SoundCloud, and Audible collecting millions of downloads a day, tens of millions a month, that means the room for consumers to want to consume audio is massive. And so to me, it's actually a contrary thesis, like for the bull case on my startup, which is that if you have a lot of people consuming audio, that means the market demand from the consumer and the creator side is actually exponential for audio, because Spotify and Audible keep pulling up record number of users that want audio content, right? If people didn't listen to audio, they wouldn't be having these thriving businesses in terms of user growth. Which means if we can figure out marketing and user acquisition, growth hacking, which is the place we're currently stuck at right now, if we figure that out, there is a massive sea of people willing to consume that audio content. SoundCloud was my life in high school. Yeah, look, SoundCloud was big for me back in high school as well, and I never thought of it again. But SoundCloud now is continuing to do numbers, and I'm so surprised. I'm like, why is SoundCloud so attractive to people? And it's because people find it as a great place to discover content. So I think there's a massive bull case for audio writ large, and Spotify capitalizing on that, even if they can't monetize it, because they kind of suck at monetizing it, and maybe that'll increase in the future. That's the bet you have to make if you're betting on Spotify. That's good writ large for the entire audio industry. Again, my biggest gripe with Spotify is I don't know if there's any value to the network outside of music, because as I've used the platform, music is the only thing that was really valuable. Because podcasts you can get on any other platform. And I switched to YouTube Music because I was like, I don't need Spotify. Like, I get YouTube Premium and I get music for free. So to me, it was never this amazing thing. But granted, there are people that are emotionally tied to Spotify and they've survived in the face of Apple and Amazon competition. So obviously there's a moat to their UI to some perspective. The question just becomes, how valuable is it writ large for people to be able to use? All right. So this is the most downloaded apps in September 2023, right? So this is what we got going on right here. Most downloaded apps for the world. SoundCloud is just music though. Yeah, that's true. Well, SoundCloud does have podcasts, but I guess people are still discovering it for music, right? So nonetheless, people want more audio content every day if they're downloading SoundCloud over a Spotify and using it as a music company. So look at those most downloaded apps. I think these charts are always interesting to look at because it gives you a gauge of what's going on in the world. TikTok got 50 million downloads last month. That is insane. 50 million people discovered TikTok. 45 million downloaded Instagram, 38 million Facebook, 32 million WhatsApp. So if we do some math there, 40 plus 30 plus 30 is 100, 100 plus 13, 115. And then you do WhatsApp for Business, 115, 125, 129. 129, and then you add in Messenger, 139, 142. For all those who say I'm bad at math, do the numbers. I just got it. 142 million people downloaded, or at least 142 million downloads, even if they were the same people, downloaded Facebook's family of apps: Instagram, Facebook, WhatsApp, WhatsApp for Business, and Messenger. That is mind-blowing. Like, is that just me, or is that mind-blowing that Facebook at 3 billion users is finding a way to get 140 million new downloads onto their family of products? What that really tells me, what the takeaway is from that, is that if you want to build a tech company like myself, and you want to get millions and millions of people to use that product, the opportunity in this day and age to get people to use your shit, even though it's hard to get people to use it, right? You got to figure out marketing and user acquisition, all that stuff. All that stuff's hard. But the opportunity is there, because I cannot for the life of me imagine how Facebook, that has already everyone in the world using it, now finds another way to get 100 million people to use it. Like, it's just insane. I just can't comprehend. It's like, it's one of those things where, like, the law of exponential numbers, like at some level, 1 trillion doesn't even make sense anymore. I don't get how they're finding more and more people. That just means there's more people in the world that are coming onto the internet, and more people in the world are going to be using these products. And honestly, that's the bull case for Google and Meta. These companies are not going anywhere because everyone in the world needs to search. Everyone wants to post photos. Everyone wants to watch videos. Like, it's the reason starting a YouTube channel or creating content, there's a bull case to it, because there's just an infinite amount of more people that potentially might be interested in your ideas. And that's an important thing when it comes to growing. So as we can see, this is big. Google got another 10 million downloads on the iOS App Store. It comes installed on Google Play, so that's why you don't see it here. Telegram, 18 million. Temu, this Chinese shopping app that's probably stealing all of our data, got 24 million downloads. So it's just absolutely incredible for some of these internet companies being able to continue to grow and doing the well. I think not all of them are you. They must have upgraded. Yeah, that's fine. But like, even if you say half of them upgraded, even if you say 70% of them upgraded, that's still like 10, 20 million new people in a month, not in a quarter, in a month, that got people to get content, or that got people to discover the products, which is just insane. Inbound says people actually downloaded Temu. Yeah, my uncle came up to me the other day. He came to our house and he was like, I just got this like gardening tool for $2 from Temu. Do you know what Temu is? And I was like, yeah, I know what Temu is. How do you know what Temu is? Google right now at $140. And he was like, oh, I saw it in an ad and I downloaded it and I got this like gardening tool for $5 from China and it came in 4 days. And I was just like, my goodness, my 80-year-old uncle is buying cheap shit from China that's going to break in a couple days because Temu is finding a way to get him to download their app. It's just insane. And look, if my 80-year-old uncle is using it, you definitely got 14-year-olds using it. Like, if you're building a consumer internet product, the opportunity is like, that is the moonshot, in my opinion. If you build consumer internet, it's the moonshot, because your TAM is the whole fucking world. Your TAM is everybody on the planet, theoretically. Obviously, you're not going to get everybody, but the fact that your TAM is so big, if you even get like 0.00001%, it's a big company. Got a drone for $10 from Temu. It won't break. That's good. At least it won't break. All right, Google at 140. Look at the only stock that's red in the entire market. Enphase. Enphase is red. United and American are red. Those are airlines. That's whatever. Apple is red. That means the market is not excited for Apple earnings. Pfizer is red. We know Pfizer is down because of the COVID vaccine declines. JPM turned red just a little bit. It's barely red, down 0.01%. Costco's a little red, and then Southwest is red. Everything else is green. So you've got airlines are red. Solar is red with Enphase, even though Solar Edge is up, and then everything else is green. Bitcoin down a little bit, but 34,400. Marathon, Riot now 16%. Marathon, look at that, up 21% on the day. Goodness gracious. Marathon up 21%. Riot up 16%. Coinbase up 14% on the day. Robinhood up 4%. PayPal up 2%. Tesla inching above $220 at $221. TFC at $27.43. Amazon at $127. Let's go to Palantir. Is Palantir at $16.80 yet? Palantir is $16.76, just 4 cents away from $16.80. Absolutely incredible. Absolutely incredible day. Bitcoin is green, and so the market ends up being green. There you go. That's what we got. That's what we got. Not bad at all. So people like cheap stuff just because it's cheap. Yeah, bro. I bought some clothes off Shein the other day. I mean, not the other day, like last year. the clothes were not that good, so I didn't go back to it. But like the fact that it was like $2 for like 5 shirts, I was like, shit, I'm gonna get this deal. I don't know how many kids are sweating in a shop to give me these shirts, but I'm sweating to get this deal. No, I'm just kidding. That's a joke. It's a joke. It's a joke. I do not condone child labor. Do not condone it. Even though these iPhones are probably made by children, I do not condone it. But I'm just saying, if they're sweating to make the shirts, as if I buy a sweatshirt and it's cheap, it's just, maybe it's worth the sweat. I'm just saying, Clean Spark up 19%. This is another Bitcoin miner. It is so fun to watch these crypto companies run off Bitcoin. Like, it's just so cool to kind of see them as an ETF basically all run at the same time. It's incredible to see that happen every time. Finally, a solid joke. That was not the only solid joke, bro. That was like, I've made an abundance of solid jokes over the past 2 weeks. They just didn't hit. Like the Squid Game one, it was phenomenal. You guys just don't get humor. The Squid Game one, it was like good. The Squid Game was just like perfect. And I thought it was perfect. It seems like everyone hated that one, but I thought it was good. Clipped. You guys clipped it. If you guys clip this stuff, you got to post it on Twitter, because I love seeing those clips. And I want to post more clips of this show on Twitter. I don't have the time in the day after the show is done to go through and clip it up. So if anyone wants to be like a little clip editor and just the funniest moments, you just clip it and just tag it on Twitter. I will retweet it, all that stuff, because it's fun seeing these moments. It's just hard for me to go back in and try to find these moments when they happen and record them. That was your best joke. I thought the Squid Game one was good. I really thought at least the kids are learning good work ethic, bro. It's insane, bro. See, this is where I think comedy is funny. If you can laugh at the absurdity of child humor and make it, or child labor and make it funny, that's why it's funny. Obviously, none of us want children to like be suffering. It's so absurd. And it's really because of a lot of what's going on in China and the hypocrisy of us, in the West, praising these American tech companies and all this stuff. But then seeing the absurdity of how we get there, there is a lot of humor in that because it's absurd. And I think there's a lot of humor in truth. And the truth is that it's absurd, right? That's why it ultimately becomes funny. Okay, my portfolio is up on the day. I just looked at my portfolio for the first time. My portfolio is up $5,696. The biggest gains on my portfolio today are SOFI. SOFI continuing to do great. TFC is up nice 7% on the day. Google, those spreads I told you guys about, they're up 13% on the day. So that's good. And PayPal is up 5% a little bit. So PayPal, SoFi, and TFC running back, and obviously Palantir. And then you got Robinhood up 4% as well. So we were all red yesterday. Basically, I made back everything that was red yesterday, and it'll probably go back to being red in the next couple of days, given how this market operates. But we are making some recoveries from yesterday on the green. Marathon calls looking good. Plus Verizon came through. Jed, that's great. Played Marathon and Verizon. Not bad at all. Not bad at all. Yeah, I mean, for those that were playing some of these Bitcoin companies like Marathon, Riot, like, again, Bitcoin's up 11%, but Marathon is up fucking 20% on the day. And so if you played these, you're up. I mean, imagine people who had, let me see. I actually want to see the option chains on this. Let's look at this Marathon. I want to see what was a $10 call going for, because it was $7 on October 3rd. So, right, what week is this? This is October 24th. So October 27th, $10 calls. Goodness gracious. $10 calls are up 653% on the day. Oh my goodness. $11 calls are up 800% on the day. If you bought an $11.50 call expiring October 27th, you are up 925% on the day. That is what's going on in the options world. Let me see some of the other dates. December 1st, even if you had a December 1st expiration for $10, you're up 134%. December 15th, you're up 111%. April 19th, 2024, you're up 60% on those $10 calls. Yeah, and it was at $7. If you thought Marathon was going to $10 and you bought some of those $10 leaps, or not even leaps, but short dated calls, you are printing some money today. Not bad at all. I had one at $50 per contract, and it's 125 G's. I sold already. Not bad. Look at how expensive the leaps are. Yeah, I wouldn't buy the leaps today. The leaps today are it's like SoFi. When SoFi went up to like $11, all those $10 leaps they printed. But if you wanted to buy those $10 leaps for Jan 2025, the day was 11. It's, it obviously was a lot more expensive. Austin says, Amit, should I get into options or just stick to stocks and ETFs? I feel like everybody makes money on options. Look, people do make money on options, but to get into options, and I am by no means an options expert, it does take a lot of months, if not a couple of years of learning it. And I'm very new to it. I've really gotten into it since May, and I've started to learn it. It takes a lot of time. So look, if you get into options, my biggest thing is just paper trade them. Like there's no reason you can't buy a $135 call on Google expiring tomorrow on even Robinhood allows you to paper trade them and just see if you had invested 20,000, what would that have turned into, right? And learn the mechanics of it. I don't disavow anyone from getting into options because I think if you're going to be an investor, there is no reason you can't use some of the alpha that is baked into the derivatives market to understand how to have outsized returns. And anyone who says that you shouldn't do that, like they just don't want you to learn. You know, would you tell someone who's coding and in computer science to not learn a new language, even if they already know Java and Python? No, because there's other languages that could help excel them in their career and they could get more opportunities and they could have outsized job opportunities because they know different languages. So I think the same thing in the investing world. You don't have to stick to just stocks and ETFs and dividend companies and not learn about options, but the risk appetite for options has to be higher and the learning curve is definitely a lot higher because it's not an easy thing. It is complicated. And I am by no means an expert, but I'm trying to understand it better every day. And I only understand a couple of strategies. You know, it's not like I understand every single strategy in the world. So I would say paper trade with them and then learn very slowly with them and then try taking a couple of bets and see how it works out. But it is definitely an asset in the tool case I think investors should have and something to want to learn to get better in investing. Higher risk, higher reward. That is correct. Higher risk, higher reward. Facts admit, but unfortunately, most people blow up their accounts with options. Yeah, if you guys remember, there was a kid who unfortunately killed himself back in 2020 when he was down $700,000 on his options and he used margin on Robinhood. And Robinhood had some really bad PR because, I mean, like imagine your company is the reason a kid commits something really bad to himself. This was June 17th, 2020 when this happens. And that kid was using his parents' money. He had no idea what he was doing. And, he ended up being in a really tough situation after he saw a $730,000 negative balance. So so for example, right, this is where you have to have restrictions. Robinhood has offered me $50,000 in margin and they offer it to me every other day. And I consistently say no, because I might think I'm understanding the equity markets a little better, but goodness gracious, Warren Buffett and Bill Ackman don't know everything you need to know about the equity markets. How am I, at 25 years old, supposed to think that I understand the equity markets enough to borrow someone else's money, be responsible for paying interest on that money, and then trying to generate enough of an alpha on the money I borrowed to be able to pay for the interest and make a profit? It's absurd, right? So when I see people say they're going into margin and playing with options, it's like, you're just a degenerate gambler that has no concern for wanting to get better at investing and taking it slow and trying to learn. Like if you're 10 years into this and you know how to use margin, by all means. If you're 2 weeks into this and you get $50,000 of free money because Robinhood offers it, which unfortunately Robinhood does offer this stuff, right? Fortunately for me as a shareholder, bad for people that are just getting into it. It's not good, right? So these are some of the things where if you're going to get into options, I think it's just being a little bit more careful when you try to get into stuff. But by no means you should think it's too complicated, it's too scary, it's too risky. Like literally, I've started working with some LLM applications. I don't know how to code. I'm not a software engineer. I literally went on Udemy. I found a 30-minute course and I'm now partially building an LLM. And I have this like kind of side idea I'm working on that I'm just trying to tinker with it. I just want to play with it a little bit, right? Just to see what happens here. And I'm like 50% of the way done building an entire LLM because like the tools are out there to learn this shit. I don't know software engineering. I don't know how to code, but this stuff is out there. I had to type some code to be able to make this thing work, but there's resources, right? It's literally just a question of like, look, if I want to learn about options, I'm going to research this stuff. I'm going to study this stuff, and then I'm going to take some action and see what happens. And that's the thing about me that I'll give myself some credit. I am a pretty interested learner. I'm curious about the world. And when I'm curious, I like will go down a rabbit hole and I will say nothing is too hard for me to like look into. And even if I'm not a domain subject expert in it, and I'm going to try, because I know if I try and I end up coming up with some good results, I can then say, look, I ended up figuring this shit out. The only thing I won't do that with is like fixing a vacuum or like going to Home Depot. That shit I just hate. But if I have to use my mind, not my hands, I will like devote all my resources and I will figure it out. If I have to actually build like when I have a kid, I'm not building their crib. I'm hiring someone to build that crib. I'm not building the fucking crib. Like I'm just not doing it. Okay, that's just who I am. But if I have to use my mind, then I'll then I'll use my mind. Imnop says options scare me. I get how they're scary, but they're only scary if you like bet a crap ton of money on them. You don't have to do that. There is a thing called paper trading. You can bet $1 million of paper money on paper options and see your money go up and down, and then decide to play with like $5,000. So I think it's a different mindset to have when it comes to being scary. Dad, good. Maybe one day I'll learn how to. By the way, I'm not the worst with my hands. Okay, I have fixed things in the house before. I've done stuff. I'm just like, dude, I don't know. I don't know what happens to my brain when I try to fix stuff. Like I just become like dumb. Like you give me something to do on the internet, I'll figure it out. You give me something to do when it comes to like fixing like a broken screwdriver or something. It's just like I don't know. I just melt. It's weird. I don't know. Maybe I think I was so enthralled in debate in high school, and I was so involved. Like I was intellectually rigorously challenging myself 8 hours a day for basically 4 years every single day in high school, not because of school, but because of debate, which was just one of the most intellectually rigorous challenges and competitions I've had. And I ended up becoming very successful at it. And so I just never cared about like I never did Boy Scouts. You know what I mean? That was the difference here. And so that was kind of how things happened for me. Okay, let's take one last look at the markets, and then we'll end it off for the day. Pound here, 1687, inching towards that $17 range, up 4% of the day. Spotify, 170. Marathon up 17%. Snapchat up 5% of the day, 4.3%. Google up 1.6%. Microsoft up 0.4%. Enphase, 96, up 0.25. Amazon, 1.3. Truist up 2.3% of the day. Tesla, 220, up 4%. PayPal's up 1.89. Bitcoin, 34,133, falling a little bit from that $34,500 range, but obviously still up at 34,000. Robinhood, 4.2% up on the day, 956. MicroStrategy up 12%. Coinbase up 13%. Riot up 12.8%. S&P 500, look at that, 424. Nice reversal from 417 yesterday. SoFi at 752. And Pounter at 1685, up 3.95% to 4% on the day. Not bad. Not bad at all. Okay, so word of the day, and then we're done for the day. I wanted to stream Google earnings and Microsoft earnings. I'm not going to get a chance. I'm just too busy today. So we'll cover it on Finance Junkies. I will be on there tonight. We'll talk about all those earnings, but not going to be able to cover them live for today. Okay, word of the day is gaffe, a social blunder, a faux pas.
Gaffe.
I think people know this word. This is when like the president says something really dumb on live TV. The politicians gaffe during the press conference, caused the media frenzy. Biden has said many different gaffes over the past couple of months. It's very interesting things, but yeah, like I think one of his gaffes was like, he said there's white kids and there's poor kids, and he meant to say like Hispanic kids, but he said poor kids, and it was just like, and then he said but Hispanic kids. It's like, you said poor right before Hispanic. So are you implying all Hispanic kids are poor? Like those are the type of things that we see when it comes to these political gaffes, but it's a social blunder. Hopefully the green we're seeing in the market today is not a gaffe, and we have some more momentum after Microsoft and Google, and keep it going from there. All right, that's it for me. Thank you all for being here. One quick request for the people that are here. If you are not following me on X yet, please follow me on Twitter. There's a great community on Twitter. If you are not on Twitter, I highly recommend just making an account. Check it out. See what it's like. I put it in the chat. Take a look. Follow me on Twitter. You get a lot more behind the scenes of my entire day, what I'm tweeting about, markets, equities, obviously Palantir. There's a ton of big Palantir community and content creators on Twitter. So if you're not on Twitter, please, please, please make a Twitter account. Try it out. See what it feels like. Even if you don't use it every day, I think there'll be some valuable content there. And follow me on Twitter, and we can keep up the conversation on that platform. All right. That's it for me. Thank you all for being here. I appreciate you all. We'll see you on Finance Junkies tonight, 7 p.m., covering Microsoft and Google. Big tech earning brown boys. Let's see if you can take us home. Thank you, everybody. I'll see you later today. Bye-bye.